we'll be learning about cost of goods sold, also known as COGS. But before learning about COGS, let us first understand why do we need cost of goods sold or COGS. Okay, so let's take a simple example here. Okay, so Mr. XYZ, okay, he starts some small business, okay, of selling chocolates. He purchases some 1,000 chocolates at rupees 8 each. That makes it 8,000. So this is his purchases, and then he, out of that, by year end he is only able to sell 750 chocolates at rupees 10 each. So that makes it 7,500. Now in simple mathematics, if you want to find out the profit what he has made in the financial year, then how will you calculate? You'll calculate selling price, that is 750 chocolates into 10, so that makes it 7,500, and then you'll reduce cost of those chocolate. So cost of only 750 chocolates you'll reduce, that is 750 into 8, that gives you how much? That gives you 6,000. So total profit that he made is 1,500. So to get the correct profit for that particular period or that particular transaction, you need to reduce only corresponding cost. Correct? You cannot reduce entire purchases because he has not yet sold all the 1,000 chocolates. So that is why concept of COGS has come. COGS is cost of goods sold. So even in accounting there is a matching concept. So to find out a profit or loss for a particular period, only sales or income of that particular period and expenses or corresponding purchases of that particular period need to be considered. This is known as matching concept. So we have cost of goods sold. Now let us see what is the formula or how to calculate cost of goods sold in accounting. Okay, now here in above example, it was a simple example wherein only one good was purchased, that is chocolate, and has been sold. Okay, but practically when you say stock, there may be 1,000 or 1 lakh type of items in the stock. Okay, for example, if you take manufacturing industry or processing industry, there may be raw materials, there may be some 1,000 variety of raw materials or 1,000 variety of work in progress, then 1,000 variety of finished goods. Similarly, if you take your normal retail business, even retail business or retail shop may have 1,000 variety of goods. So practically it's not possible to calculate selling price and corresponding cost price of each and every item. So what we do is we calculate the total cost of goods sold, and then we reduce it from selling price to get profit or loss. So let us understand what is the formula for cost of goods sold. So cost of goods sold is equal to opening stock. Okay, opening stock is stock at the beginning of the year, or it may also be at the beginning of the period which has been considered. For example, if you want to know what is the profit of 6 months, then stock at the beginning of the 6 month becomes your opening stock. Then add purchases, okay, for that period, whatever is considered. Correct? Then less purchase return. Okay, if you have returned any goods, you have to reduce that. Then less closing stock, that is stock at the end of the year or at the end of the period, whatever is considered. Okay, now this will give you cost of goods sold. Okay, now we will see one example of how to calculate cost of goods sold and then gross profit. Okay, now this is the example. Messrs ABC has a retail shop. Financial year is from 1/4/2016 to 31st March 2017. He has 1000 variety of items in his shop. Okay, so opening stock as on 1/4/2016 is rupees 1 lakh. So what is practically done is all the, as on 1/4/2016, all the variety of items are physically counted, and then the value of each item is multiplied to get the opening stock. So this is a opening stock, total opening stock of all the 1000 varieties of items. Okay, then purchases in the year, this is the total purchases of all the items in a shop, is rupees 10 lakhs. Purchase returns in the year is rupees 1 lakh. Closing stock as on 31st March 2017 is rupees 2 lakh. Sales during the year is 12 lakh. Calculate cost of goods sold and also gross profit for the year ended 31st March 2017. Okay, so we have selling price. First we will calculate cost of goods sold. Cost of goods sold, okay, is equal to opening stock plus purchases minus purchase returns minus closing stock. Okay, so what is the opening stock? 1 lakh plus purchases 10 lakh minus purchase return is again 1 lakh, closing stock 2 lakhs. Okay, so 1 lakh plus 10 lakhs 11 lakh minus 1 lakh again 10 lakh minus 2 lakh, you get cost of goods sold as 8 lakhs. Okay, now what is the gross profit? Selling price minus cost of goods sold, that is 12 lakh minus 8 lakh, so that gives you 4 lakhs. 4 lakh is the gross profit for the year 2016-2017. So this is the way we calculate cost of goods sold. Okay, now earlier we took an example of a retail industry. Now we are taking an example of manufacturing industry. Messrs RMZ is manufacturing tomato ketchup, and following are the details of stock as on 1/4/2016. So details of stock are bifurcated into two things: raw material and packing material, and then finished products. Correct? So you can see here raw material includes raw tomatoes and spices, then glass bottles and sachets, and finished products include tomato ketchup bottles and tomato ketchup sachets at the beginning of the year. Similarly, the details of purchases are also given. Now these are net purchases, that is purchases less returns. Correct? Then details of stock as on 31st March 2017 is also given. Correct? That is raw material and packing material and finished product. Okay, now what we have to do is we have to calculate cost of goods sold. Okay, now in this case, since this is a manufacturing industry, your cost of goods sold, okay, cost of goods sold will include cost of raw materials plus manufacturing cost, correct, and your opening and closing stock of finished goods, right? That is cost of your finished goods. Okay, now first we'll see what is raw material. Okay, COGS raw materials we'll calculate. Okay, so in this case the opening stock of raw material has how much? 14,000. Then purchases is how much? 1,20,000 less purchase returns, so this is already net purchases, correct. And then closing stock is how much? 20,000. So cost of raw material is opening stock plus purchases minus closing stock. Okay, so opening stock was how much? We'll see again. It is 14,000. 14,000. Purchases is 1,20,000 minus closing stock is how much of raw material and packing material? It's 20,000. So how much does it come to? 1,20,000 minus 1,14,000. Okay, so this is your cost of raw material. Now let's go to finished goods. Okay. Now since this is a manufacturing industry, there are no purchases of finished goods. So cost of finished goods, how do we calculate? Opening stock plus manufacturing costs. Okay, this is important now. Less closing stock. So let's see what is the opening stock of finished goods. Opening stock of finished goods is how much? 19,000. So opening stock is 19,000 plus manufacturing cost. It's given manufacturing cost is rupees 5 lakh. So 5 lakh minus closing stock. Closing stock comes to how much? 21,000. Okay, so 19,000 plus 5 lakh minus 21,000. So this comes to 4,98,000. Okay, so what is total cost of goods sold? Total cost of goods sold is 1,14,000 plus 4,98,000. That gives you 6,12,000. Okay, so that's it about cost of goods sold.